Hello everyone, this is Jennifer. We're going to start with illustration 16. Following are the summarized balance sheet of Sahana Limited as on 31st December 2013 and 14. They've given the balance sheet. Share capital will go in your fund flow statement. General reserve fund flow statement. Profit and loss account, it is the opening and closing balance of your adjusted profit and loss account. Creditors, it's a current liability. Provision for taxation, so just see if there are any adjustments given, then you will consider it as the non-current liability as it is given, so you consider it as a non-current liability. You'll prepare a ledger account. So mortgage loan will prepare a ledger account, so non-current liability, and it's a long-term liability. Fixed asset ledger account. Investment non-current, so ledger account. Stock working capital, so schedule of changes in working capital. Debtors schedule of changes in working capital. Current asset bank schedule of changes in working capital. They have told investments costing 8,000 were sold during the year 2014 for rupees 8,500. So investment costing 8,500 was sold for 8,500. So it is 8,000, but it was sold for 8,500. So what is the profit? 500 is your profit. Provision from taxation made during the year is 90,000. So during the year, part of the fixed asset costing 10,000 was sold for 12,000. So 200 is your profit, which is included in your profit and loss account. Dividend is paid, so you'll add it in your. So it's an application of funds, and also in your adjusted profit and loss account, you will put it in your debit side. So it will be 2 dividend paid because cash is moving out. So you start with schedule of changes in working capital. You start with current asset. In the question we have stock. Stock has decreased, so you'll put it in a decrease column. Debtors has increased, so you'll put it in your increase column. Bank has increased, so you'll put it in your increase column. Current liability, creditors have decreased, so when current liability decreases, your working capital increases, so you'll put it in increase column as 34,000. So working capital A minus B, which is your total current asset minus your total current liabilities. So increase in working capital is the 4,31,000 minus 7,28,000, so 2,97,000 will be your increase. So you'll put it in a decrease column to balance it with your increase column. So your various ledger accounts, first we start with your fixed assets account. You have a debit balance to balance brought down 4 lakh, buy balance carried down 3,20,000. In the question they have told there is a sales made for wherein for 10,000 is your value of the asset, but it was sold for 12,000. So buy cash account 12,000. So to adjusted profit and loss account 2,000, which is a profit on sale of fixed assets. So there is a balancing figure which is by adjusted profit and loss account, we consider it to be a depreciation, which is 70,000. So investments account, to balance brought down, buy balance carried down. They have told there is a sale of investment which is 8,500. So buy cash account 8,500, and to adjusted profit and loss account, which is the profit on sale of investment 500. So the balancing figure will be to cash account, which is purchases. Share capital account, buy balance carried down, buy balance brought down, to balance carried down, which is balancing. There is no any balancing figure. Then we have the general reserve account, buy balance brought down 3 lakh, to balance carried down 3 lakh 10,000. So your balancing figure is by adjusted profit and loss account 10,000. So it will directly go as transferred to general reserve. Provision for taxation, you have your buy balance brought on 75,000, to balance carried down 10,000. So the current year's provision made, which is given as an adjustment, it is by adjusted profit and loss account 90,000. So your balancing figure is to cash account 1,55,000, which is considered to be your tax paid. Mortgage loan account, buy balance brought down, you do not have anything. To balance carried down, which is 2,70,000. So buy cash account 2,70,000. So we have prepared all the ledger accounts for the non-current asset and liability. Now we are moving on to your adjusted profit and loss account. First we start with all the depreciation. So in a fixed asset we have the two depreciation on fixed asset, which is 70,000, to transfer to general reserve 10,000. How do we get all this? Is wherever you have your adjusted profit and loss account, if you have debited there, you will be crediting here. It's a corresponding entry which is coming here. So look into all your ledger accounts. So two provision for taxation 90,000, two dividend paid, which is an adjustment. They have given 40,000, two dividend paid, cash is moving out, so it will be debited adjusted profit and loss account to do dividend paid. So buy balance brought down, which is your profit and loss opening balance, to balance carried down, it's a closing balance. So all the profits will come into your credit side. So buy profit on sale of fixed assets 2000, buy profit on sale of investment 500, which is also in your ledger accounts. So your balancing figures: buy funds from operation 2,19,500. So moving on to your fund flow statement. So whatever you have your cash balances, to cash, buy cash. If it is to cash, the cash is moving out, so it becomes application of funds. If it is buy cash, cash is coming in, so it becomes sources of funds. So whenever the cash is coming in, it come into your source of funds. Whenever the cash is moving out, it come the application of funds. So you have source of funds: sale of fixed assets 12,000, sale of investment 8,500, mortgage loan 2,70,000, funds from operation is 2,19,500, increase in working capital is 2,97,000, purchase of investment is 18,000, tax paid is 1,55,000, and dividend paid is 40,000. So your fund flow statement gets tallied. We're moving on to the next sum. So from the following balance sheet of XYZ Limited, prepare fund flow statement for 2015. You have your liability side and you have your asset side. So what have they given? The information is part of the land was sold out in 2015 and the profit was credited to capital reserve account. So part of the land was sold and the profit was credited to capital reserve account, they have told. So here in this question we will not be crediting it to your adjusted profit and loss account, but to your capital reserve account. A machine has been sold for 5,000. Written down value of the machine is 6,000. Depreciation is 5,000 charged on plant in 2015. So let's look into the machinery account. So machine was cost sold for 5,000. The written down value of the machinery is 6,000, meaning to tell the actual value of the machinery is 6,000, but it was sold for 5,000, meaning there is a depreciation of 5,000 which was charged on plant. The meaning there is 1,000 which is reduced and sold, so that is nothing but your loss. 6,000 minus 5,000, why 1,000 will be your loss. Depreciation of 5,000 was charged on plant and machinery, so it will become to by depreciation account or by adjusted profit and loss account. In brackets you can write it as depreciation. An interim dividend of 10,000 was paid, so it will come in your adjusted profit and loss account and it will be an application of funds in your fund flow statement. An amount of 1,000 was being received by way of dividend on investment, so it is your dividend on investment received, so it's an income, so it will come in your sources of funds. You start with schedule of changes in working capital. In this, if you see, you do not have anything regarding your provision for taxation and proposed dividend. Here it is given in your balance sheet and you do not have any adjustment regarding it, so you can take it once and you can consider it as a current liability and can take it in your schedule of changes in working capital. So you start with schedule of changes in working capital. Current asset, you have sundry debtors, stock, bills receivable, cash in hand, cash at bank. So if the current asset increases, you'll put the increase amount in the increase column. If it decreases, you'll put the decrease amount in decrease column. And because when current asset increases, your working capital increases. When current asset decreases, your working capital decreases. And your current liability You have proposed dividends, sundry creditors, bills payable, liability expenses, and provision for taxation. So when your current liability increases, your working capital decreases. So if you see there's an increase, you'll put it in a decrease column. So 21,000 to 25,000, it has increased, but you'll put it in your decrease column, because the logic behind is it, when current liability increases, the working capital decreases. When current liability decreases, your working capital increases. And you have your working capital, which is current asset minus current liabilities. So 52,000 was last year, 64,000 was current year. So there's a 12,000 increase in the working capital. So you start with your ledger accounts, preparation of land and building accounts, to balance brought down, by balance carried down. So so they have told there's a profit on sales which has been transferred to your capital reserve account. So it will be to capital reserve account, which is a profit on sales. So first of all, what is the sales amount? One second, we'll just look into it. So if you see, last year it is 1 lakh, current year it is 85,000. In the adjustment, they have not provided what is sold, how much has been sold. So you consider the 25,000 to be sold, and the 25,000, 10,000 is your profit on sale. So by cash account, which is sales, is a balancing figure 25,000, and it has been transferred. The profit on sale is transferred to your capital reserve, which is 10,000. So plant and machinery account, it is to balance brought down 40,000, by balance carried down 1 lakh. So there is, so to balance brought down 40,000, by balance carried down, it is 1 lakh. So let's look into the question and see. And if an adjustment has been given, they have told a machine has been sold for 5,000, written down value of the machine is 6,000. So by cash account, sales amount is 5,000. What is the written down value of the machine? 6,000. So meaning to tell, it is sold at a loss of 1,000. 6,000 minus 5,000. So by adjusted profit and loss account, loss on sale is 1,000. And they have told depreciation of rupees 5,000 was charged on plant in 2015. So by adjusted profit and loss account, depreciation 5,000. So we have written down anything. So the balancing figure is to cash account, plant purchases, we consider it as purchases of plant, which is 71,000. Capital reserve account, to balance capital reserve account, in your land and building you have debited it, so here you will be crediting it, the corresponding entry. So by land and building account 10,000, to balance carried down 10,000. Adjusted profit and loss account, so to goodwill written off 10,000, to depreciation on plant 5,000, to loss on sale of machinery 1,000, to preliminary expenses written off 3,000, to interim dividend 10,000, and to general reserve it is 5,000. So all the non-operating and non-fund expenses will be debited. So any income received will be credited. So by balance brought down is 15,000, to balance carried down is 20,000. If it is funds from operation, it will be from your debit side. If it is funds to operation, it will be in your credit debit. Sorry, if it is funds from operation, it will be in your credit side. If it is funds to operation, it will be in your debit side. So by dividend received is 1,000. Funds from operation, which is a balancing figure, is 42,000. So fund flow statement. So increase in working capital is the application of funds 12,000, purchase of plant 71,000, purchase of investment 5,000, redemption of preference share capital, meaning to tell, if preference share capital is reduced from last year to current year, you assume it that you have been paying your redemption preference shareholders, that's why it is reducing. If it is increased, you are it will become a sources. So redemption of preference shareholders 25,000, interim dividend is 10,000. So moving on to your source of funds, capital 50,000, if it would have been raised, so it is 50,000. Sale of plant 5,000, dividend received on investment, which is from your adjustment 1,000. Funds from operation 42,000. If it is funds to operation, become application of fund. Sale of land and building 25,000. So moving on to your 18th question. So from the following balance sheet of Trishul Industries as on 31st December 2014 and 15, you have your liability side and you have your asset side given. So dividend paid, income tax paid, there was profit on sale of investment, a machinery cost 50,000 on which accumulated depreciation is 40,000 was sold for 20,000. So 50,000 minus 40,000 is how much? 10,000. 10,000 is the written down value of the machinery, but it was sold for 20,000, meaning to tell there's a profit of 10,000. So if you see there's a profit on sale 10,000. So you start with your schedule of changes in working capital, current assets, stock, debtors, cash, total assets you have, and creditors you have, and total liabilities. So last year to this year there's an increase of 85,000 in your working capital, which will directly go to your application of funds. So working note, fixed assets account, to balance brought down, by balance carried down. You have by cash account, which is sales of 20,000, by depreciation account, which is 40,000, to adjusted profit and loss account. For 50,000 was the actual cost, the actual price of the machinery, and you have your depreciation 40,000, so minus 40,000. But so you have 10,000, written down value is 10,000, but it was sold for 20,000, so the profit is 10,000. And to cash account, which is your balancing figure, we again consider it as purchases 2,50,000. Now depreciation account, by balance brought down 1,50,000, to balance carried down 2 lakhs. So by adjusted profit and loss account, so in your fixed asset, if you see there's a corresponding entry, depreciation provision 40,000. So that will come here as a corresponding entry as to fixed asset account 40,000. So by adjusted profit and loss account 90,000, which is a balancing figure of depreciation on remaining machines. So investment account, to balance brought down 2 lakh, by balance carried down 1,80,000. So to adjusted profit and loss account, which is a profit on sale, which they have given in your adjustment 10,000. So by cash account, sales balancing figure 30,000. Provision for taxation, by balance brought down 40,000, to balance carried down 50,000. So by adjusted profit, to cash account, which they have told tax paid 50,000. So by adjusted profit and loss account, which is your balancing figure, which is your provision to be made for the current year 60,000. So you have your adjusted profit and loss account. If so, to depreciation 90,000, to transfer to general reserve 50,000, to provision for taxation 60,000 from your provision for taxation ledger account, to underwriting commission written off, that is from your balance sheet 5,000, to dividend paid from your adjustment 40,000. By balance brought down is 1 lakh, to balance carried down is 1,50,000. So by profit on sale of machine is 10,000, by investment profit on sale is 10,000. So your balancing figure will be funds from operation, which is 2,70,000. So this funds from operation will go to your sources of fund flow statement. So moving on to your fund flow statement, funds from operation is 2,75,000, sale of fixed asset is 20,000, sale of investment is 30,000, share capital is 1 lakh. Purchase of fixed asset is 2,50,000, payment of dividend is 50,000, payment of tax is 50,000, payment of dividend is 40,000, and your net increase in working capital is 85,000. So your fund flow statement gets tallied. Moving on to our next sum, which is the following are the summarizers of the balance sheet of Vijay Lakshmi Limited as at 31st December 2015 and 2016. You have your balance sheet given, you have your liabilities, and you have your assets. So additional information is depreciation was written off, plant 28,000. So this is the depreciation on plant, which is 28,000. So it will go to your plant and machinery account, which is by profit and loss account, depreciation 28,000. And it will go to your adjusted profit and loss account. Dividend 40,000 paid, it will go to your adjusted profit and loss account and in your fund flow statement as application. Income tax provision made will be by By adjusted profit and loss account 50,000 as income tax provision, and it will go as to income tax provision in your application of funds. A piece of land has been sold during the year at cost. So piece of land has been sold, so earned 4 lakh, 3 lakh 80,000 has been reduced, so 20,000 has been sold. So this 20,000 is sold at a cost itself. There's no profit nor there is loss. So schedule of changes in working capital, you have your current assets and you have your current liabilities. So if you see there is a net decrease in the working capital. So last year it is 61,000, this year it is 23,600. So it is a decrease in working capital of 37,400. So this decrease will go to your fund flow statement as sources of funds, which is net decrease in working capital. Why? Because you are not using too much of money. It is sources, you're reducing your working capital investments. So next is your share capital account. To balance brought by balance brought down, to balance carried out. The balancing figure is by bank account. General reserve account, by balance brought down, to balance carried down. The balancing figure is profit and loss account, which is considered as a transfers. Provision for taxation, by balance brought down, to balance carried out. By profit and loss account, which is your current year provision, which they have given it as 50,000 in your adjustment, you'll put it here. So your balancing figure will be to tax paid balancing figure, which is bank account. So bank loan account, by balance brought down, to balance carried down, it gets balance 1,40,000. Land and building, to balance brought down 4 lakh, by balance carried down 3,80,000. So by bank account, which is 20,000. So plant, to balance brought down 33 lakhs, by balance carried down 3 lakh and 48,000. So by profit and loss account, depreciation 28,000. So to bank account, which is your balancing figure, is 76,000. Why aren't we showing that 20,000 as your profit or loss? This 20,000 I told, right, which is in your adjustment telling a piece of land has been sold at cost. So there's no profit, there's no loss. So this is your sales figure by bank account, which you're selling. So cash is coming into the business. So by bank account 20,000. So calculation of funds from operation, which is nothing but we are doing it in a statement form. So you start with profit and loss account balance, which is 61,600. Add, so whatever you debit here, there you will add it here. So non-fund items debited to your profit and loss account. General reserve 20,000. Provision for taxation 50,000. Depreciation 28,000. Dividend paid 40,000. Total is 1,38,000. Less your profit and loss account balance in the year 2015, which is 61,000. So your fund from operation is 1,38,600. So you go back to your statement of sources and application of funds. So you have your, in your sources we have whatever there is inflow of funds, it will be your sources. Outflow of funds will be your applications. So issue of shares 1 lakh, sale of land 20,000, funds from operation 1,38,600, net decrease in the working capital 37,400, bank loan paid 1,40,000, plant purchase 76,000, income tax paid 40,000, dividend paid is 40,000. So moving on to your next question, which is question number 20. So from the following details relating to the accounts of the limited, prepare a statement of sources and application of funds. So you have your 15% depreciation has been charged in the accounts on plant and machinery. So it will come in your plant and machinery ledger account. Old machinery costing 50,000, written down value is 20,000, has been sold for 35,000. So let me explain it in your ledger accounts. So I've told old machinery costing 50,000. The written down value is 20,000. Has been sold for 35,000. So 50 minus 20. So the value of the machinery is 20,000, but it was sold for 35,000. So meaning to tell there's a 15,000 profit. So 20,000. So 20,000 minus 35,000, 15,000 is a profit. So 2 profit on sale of plant 15,000, and they're telling plant a machine costing 10,000, written down value is 3,000, has been discarded. So meaning to tell 3,000 is the value of machine has been discarded. So buy machine discarded 3,000, and buy loss on sale of machine, which is 7,000. 10 minus 3, 7,000. So plant costing 2,30,000 was purchased during the year. So two cash purchases 2,30,000. So these are the various adjustments. So we have the other adjustments regarding your investment being sold at a profit of 10,000. Debentures has been redeemed at 5% premium, and 45,000 income tax has been paid during the year, which has been adjusted against your income tax provision account. So you start with the schedule of changes in working capital. You start with current assets, then you move on to your current liabilities, then there's working capital A minus B. If you see the last year, it is lesser than the current year, so there's a net increase in the working capital. So moving on to your ledger account, income tax provision. Buy balance brought down 15,000, to balance carried down 40,000, to cash account 45,000, which is a tax paid, and buy profit and loss account 35,000. Proposed dividend, buy balance brought down 30,000, to balance carried on 40,000. So to cash paid, which is your dividend paid 30,000, by profit and loss appropriation account 40,000. So plant and machinery, to balance brought down 2,98,000, by balance carried down 53,750, by sale of old machinery 20,000, by machine discarded 3,000, by adjusted profit and loss account 30,000. By profit on sale of machinery 7,000, which is your profit. How did you get this 30,000? As nothing but your, they're telling, right, written down value is 20,000. The cost of the machinery is 50,000. So 50 minus 20, which is your 30,000, is nothing but your depreciation. So you consider it as by adjusted profit and loss account 30,000. So this is by loss on sale of machinery, which is 7,000. Discarded is 30,000. 3,000, so 7,000 is your loss. So by depreciation account, which is your balancing figure 53,750. So to profit on sale of plant 15,000, to cash purchases 2,30,000. Investments, to balance brought down 1 lakh, by balance carried down 60,000. To profit and loss account, profit on sale is 10,000, by cash, which is sale, is 50,000. Sale amount is 50,000, on that profit is 10,000 we have got. So adjusted profit and loss down, to goodwill written off 10,000, to debenture discount written off 3,000, to premium on redemption of debentures. So how do you calculate premium on redemption of debentures? So if you see debentures, last year it is 1 lakh, this year it is 1,50,000. So it has increased, but they are telling debentures have been redeemed at 5% premium. So meaning to tell, sorry, the last year it is 1,50,000, the current year it is 1 lakh. They have given the dates opposite, so it has decreased by 50,000. So 50, last year it is 1,50,000, the current year it is 1 lakh. So 50,000 is your difference. So in this 50,000, there is a redemption of debentures, which is 5%. So 5% into 50,000, which is 2,500. To loss on machine discarded 3,000. To provision for income tax 35,000. To proposed dividend 40,000. To reserves, the transfer to general reserves 20,000. To depreciation on plant is 90,750. By balance brought down 30,000. By profit on sale of machine 15,000. By profit on sale of investment 10,000. So your funds from operation, so So you have your balancing figure 30,000, balance carried down is 50,000. So your funds from operation, which is a balancing figure, 1,99,250. So you move on to your fund flow statement, which is to start with your share capital. So share capital 1 lakh, sale of machine 20,000, sale of investment 50,000. Funds from operation is 1,99,250. Redemption of debentures 52,500. Purchase of machine is 2,30,000. Payment of tax is 45,000. Dividend paid is 30,000. Increase in your working capital is 11,750. So your balance sheet tallies with 3,69,250, 3,69,250. So moving on to your next sum, which is a question number 21. From the following balance sheet of the limited X limit of X Limited for the year ending 31st December 2014 and 15, we are supposed to prepare your fund flow statement. So they've given liabilities and assets. So moving on to your adjustments, a piece of land has been sold out in 2015 and the balance has been revalued. Profits on sale and revaluation have been transferred to the capital reserve account. Instead of transferring it to your profit and loss account, you are transferring it to the capital reserve account. So depreciation on plant and machinery has been written off 24,000 2015 and no depreciation has been charged on land and building. A machinery was sold for rupees 16,000, written down value being 20,000 and no machinery has been sold during the year. An interim dividend of 20,000 has been paid. So cash is going out, so it will be to dividend account and your profit and adjusted profit and loss account, and dividend paid will be your application of funds. 3,000 has been received as dividend, so it will be dividend received accounts as your sources of funds. You start, so if you see in this, since proposed dividend provision for taxation are to be treated as current liability because they do not have any adjustments given and they have your opening and closing balance, you can treat it as a current assets or a current liabilities respectively. Current liability respectively, they should be taken in your schedule of changes in working capital. So you have your current assets, you total up your current assets, you have current liabilities, and that you have a proposed dividend and provision for taxation also. So then you calculate your working capital. So increase in working capital, so last year it is 89,000, the current year it is 1,10,000. so your increase in working capital is 21,000. So you start preparing a ledger accounts. So you start with goodwill account by to balance brought down, by balance carried down 60,000, 55,000. So adjusted profit and loss account is 5,000. So that is nothing but your transfer to that goodwill written off, which is 5,000. Land and building account to balance brought down 1,25,000, by balance carried down 85,000. So by bank account, which is your 60,000 balancing figure. So if there are any profits, it's transferred to your capital reserve account. So you assume there is 60,000 of sales and there is 20,000 of profit. So if you see the question, a piece of land has been sold and the balance has been revalued and been transferred. So what is your piece of land that is being sold? So if you see your land and building, last year it is 1,25,000, the current year it is 85,000. So you assume it to be 85,000, 60,000 is your sales, and in that 20,000 is your profit, which is nothing but this is your balancing figure, which you consider it as profit to capital reserve account 20,000. So this is, so the to capital reserve account will be your balancing figure. So Next we move on to the plant and machinery account. True balance brought down 1,20,000. By balance carried down 25,000. So by adjusted profit and loss account there is a depreciation of 24,000 given in the question, and by cash account they are telling there is a sales of 16,000, and in that there is a loss which is made of 4,000. So your two cash account, which is your purchase of machinery, is 1,49,000. So moving on to your furniture account. To balance brought, so your cash account, plant and machinery account gets balanced with 2,69,000, 2,69,000. Furniture account, to balance brought down 15,000, by balance carried down 12,000. So your adjusted profit and loss account is 3,000, which is considered to be your depreciation. So your trade investments account, to balance brought down 12,000, by balance carried down 48,000. So by bank account you have a dividend which is 3,000. So to profit and loss account 3,000, you are transferring that, and to cash account, which is nothing but your balancing figure, 36,000. Preliminary expenses, to balance brought on, by balance carried down. So you have your adjusted profit and loss account, which is nothing but your return of balancing figure of 5,000. So equity share capital, by balance brought down 3 lakh, to balance carried down 4 lakh. The cash account is 1,000, which is nothing but cash is coming into the business. You consider that 1 lakh as shares in your sources of funds. So 6% redeemable preference share capital. So by balance brought down 80,000, to balance carried down 50,000. So your balancing figure is to cash account, which you consider as application of funds, 30,000. To capital reserve, by balance brought down you do not have anything. To balance carried down 20,000. So by land and building, which is your corresponding entry from your land and building account, which is 20,000. So general reserve account, by balance brought down 30,000, to balance carried down 40,000. By adjusted profit and loss account 10,000. So your adjusted profit and loss account, to goodwill return of 5,000, to depreciation on plant 24,000, to loss on sale of machinery 4,000, to depreciation account 3,000, to preliminary expenses return of 5,000, to transfer to capital reserve 60,000, interim dividend paid 20,000, to transfer to general reserve 10,000. By balance brought down is 26,000, to balance carried down is 35,000. By dividend received is 3,000. So you have your funds from operation, which is your balancing figure of 1,37,000. So fund flow statement. So all your sources, whichever increases your fund flow statement or funds in the company, will come under your sources. Whichever decreases your funds in the company will come under your application of funds. So sale of plant 16,000, issue of share capital 1 lakh, funds from operation is 1,37,000, dividend decision is 3,000, increase in your working capital is 21,000, purchase of plant is 1,49,000, purchase of trade investment is 36,000, redemption of 6% redeemable preference share capital is 30,000, interim dividend paid is 20,000. How do we get all this? Is you have to look back to your balance sheet from the question, and you have to look back to your ledger account. So the corresponding increase will come here. If your liabilities increases from your last year to your current year, for example, if your share capital increases, then there is issue of shares. If it decreases, then there is redemption. If your fixed asset increases, then there is purchases. If your fixed asset decreases, then it is your sales. So any other things will come on, like your funds from operation will be your sources, funds to operation will be your application, dividends paid will be your application of funds, dividend received on investment will be your sources of funds. So increase in working capital will be your application, decrease in working capital will be your sources. So all this purchase of trade investments will be your application of funds, sale of any fixed assets will be your sources of funds. So thank you everyone.